Hello everyone, it's Khaled. Welcome to today's daily pitch, 13 of Feb 2026. Let's dive into the latest economic events, technicals, and see what's moving the markets. In today's episode, we will be analyzing the upcoming economic data, which is the CPI, and giving what are the possible scenarios we could see on the dollar index, on US equities, and on gold as well. So, looking at our economic calendar, as we can see, we had some economic data, but what is the more important is the CPI we're expecting in around 2 hours or a little bit less. So, looking at our economic data, today we had the GDP for the Eurozone, which was similar to expected at 1.3%. And moving on during the day, we have the CPI data. Mainly, I will keep an eye on the CPI year over year. The CPI index is expected to drop from 2.7 to 2.5%. And the core CPI is expected to drop from 2.6 to 2.5%. So, in other words, we are looking to have a lower than expected inflation data. Of course, this will give us a little bit of clue of what will be going on with the Feds next year. During this year, not the next year. Hello, Ankit. I'm good. Glad you're joining. So guys, the first scenario, let's have a look on the dollar index. I usually would like to analyze the dollar index because it will be affecting several currency pairs, and then we will move on to gold, and then we will move on as well and look at the US equities. On gold, I will show you, this was our analysis yesterday, how price reacted here. It was a very nice reaction. And in case you want to know more about how these entries to be taken at these areas of interest, don't forget to register to our educational webinar that will be live on Monday. We will be discussing how to trade the lower time frame on these important areas of interest. Let's go back to the charts. Looking at the dollar index, I had this analysis before. Let's remove it and zoom to the 4-hour time frame. Looking at the 4-hour time frame, we can see that the dollar index, after it reached the 98, approximately 97.9, we had a short move down and currently reacting here. The non-farm payroll or the employment data didn't hold too much weight. Now we will see today what will happen with the CPI or inflation numbers. The first scenario, of course, what if the numbers are higher than expected? If we see numbers higher than the 2.5 and specifically higher than the previous as well, for example, the year over year above the 2.7 and the core above the 2.6, this will indicate that the inflation is still high. The Feds will keep interest rates higher for longer, and this will be translated as a strength for the US dollar. And I believe we could be retesting these highs once again at the 97.7 till 98. So this is the first scenario. In case we had higher than expected CPI, the dollar index could be breaking higher, and the next zone I will be looking at is above is approximately reaching these all-time these highs at the approximate 97.8 till 98. Let me try to fix this one. Okay, much better. The next scenario we could have, what if the numbers are lower than expected? If we see numbers below the forecast, below the 2.5% for both the core and the headline CPI, this means that the inflation is under control, it's dropping, and the Feds have the room to lower interest rates faster or more than expected. Usually, currently, the markets are expecting the first rate cut to take place from June onwards. The markets are also expecting 2 rate cuts during this year 2026. So in case we see lower than expected CPI, this could mean that we could see more rate cuts, maybe 3 rate cuts, or the first rate cut before June. In other words, this will be translated as weakness on the US dollar, and we could see the dollar index moving lower. The first area I will be monitoring are these lows at the 96.5 approximately, and in case we are able to dig lower, this is a very important level at the 96. So I will be doing something like this, and this scenario in red in case we have lower than expected CPI numbers. The final scenario and the least favorable scenario for us is the numbers similar to forecast. In this case, we will not see a clear direction. Usually we just price making a whipsaws and moving like this, waiting for the next fundamental catalyst to be giving us a clear direction. These are the zones, these are the scenarios I see in the dollar index. Let's move on to the US equities. Well, some people find it a little bit confusing on US equities and how they react whenever we have an economic data. These are the trade ideas we had previously. We said that in case we broke below these highs, we could be digging lower. Currently we broke, retested, and we can see this on the lower time frame as well. It was a very clean break and retest. We broke below these lows, price retested, and zooming in, you can see a engulfing candle showing failing to break higher, and then we moved lower. So this trade idea is playing well. Okay, so the scenario on the US equities, I will be looking at Dow Jones. Usually all of them will be moving in the same direction. In case the CPI is higher than expected, and this means that the Feds will keep interest rates higher for longer, this will be giving us the following direction. It will have a negative impact on the US equities, and my next area of interest I will be looking at is the 48,600. This is scenario number one, in case the CPI is higher than expected. Scenario number two, what if the CPI is lower than expected, rate cut expectations. Don't forget that beginning of the week we had the retail sales, which came in lower than expected as well. So all of these are pushing that rate cuts will be more during this year. A lower than expected CPI will be giving us the following price movement. I will be looking for candles breaking above the 49,900, the next candle creating like a small support, and then I will be looking for a retest of these candle highs at the 50,500. This is scenario number two. In case we had the momentum and the numbers were really lower than expected and we were able to break above the 50,500, here it will get a little bit tricky because you will never know where price will react. Whenever I draw this area, it is a psychological area. It was an estimation because it's a new all-time high, and usually you will never know where price will take its next reaction. That's why I will be estimating as well. The next area of interest is the 51,000. Let's put it here. So in case the momentum was still available, candles were able to push higher, I believe we could be retesting the 51,000. The final scenario, similar to what we mentioned, and the least favorable scenario, what if the numbers were similar to forecast? In this case, we could be seeing just price making the following. No clear direction, especially it's Friday, ending the week, waiting for next week for the next fundamental catalyst, as we mentioned, to see a more clear direction. Finally, guys, let's move on to gold. Before moving to gold, if you like our content, don't forget to leave us a like, follow, and subscribe. If you want us to analyze any currency pair, you can type for us in the comment section and we can do the analysis together. Looking at gold. Yesterday, we had the following areas of interest. The first one was at the 4,970. The next one at the 880 approximate. I was watching the price action yesterday. I saw that, let's zoom in a little bit to the lower time frame. It was extremely bearish. So of course here I didn't take any entry. I had a limit here at the 4,895 approximate. It got activated and then I closed my trade since I saw a very large volume and volatility. The trade went, I had a 300 pips stop loss. And my take profit was at 100 pips, but I closed it approximately at something like this, at 600 pips. Because as I said, the volume was very high. I didn't want to be in all this profit and then get wicked out. But for now, these areas of interest are still holding. You can see that whenever we retested the 4,880, we moved up. Currently, we are failing to break above the 4,980. We are just consolidating. In general, I do not advise anyone to take any trades in this time, especially that we still have, as I said, around hour and a half for the economic data to be released. Just stay sidelines, wait for the data to be released, analyze the numbers, and then based on that, take your trades. Scenario number one for gold. Similar to the US 30. In case the numbers were better than expected, higher than expected. If the CPI numbers are higher than expected, it will be translated as dollar strength and gold weakness. In this case, I would like to see gold making an upper wick, retesting the 4,980, failing to break, and my next area will be again the 4,875 to 4,880. In case we are able to break lower, my next area I would be looking at is these candle lows at the 4,700. So this is scenario number one in case the inflation numbers are higher than expected. If the inflation numbers are lower than expected, we can see the following. And to be honest, I prefer to see lower than expected because currently the markets are focusing in the rate cuts, and this will be supporting the narrative of rate cuts. So in case inflation numbers are lower than expected, I will be looking for a candle break above the 4,000, above the 5,000 to be more accurate, and breaking above this psychological number. Breaking above the 5,000, my next area I will be looking at is the 5,100, keeping in mind that we are looking currently at the lower time frame. We fix the color for this one. Okay, keeping in mind the reaction here at the 5,080, but I believe we could be breaking higher and reaching the 5,100. This scenario in case we had lower than expected CPI. And finally, if the numbers are similar to forecast, I believe we could be just consolidating here with a messy price action with no clear direction until we end the week and wait for the next fundamental catalyst. So guys, that's it for our episode for today. These are the scenarios. Hopefully you enjoyed our session. Watch out for the volume and volatility. Don't get lost in the lower time frame noise. Wait for the numbers to be released, analyze the numbers, and then plan your entries based on the economic data and based on the areas of interest you are marking on your charts. Thank you for joining, and we will see you soon.